American Airlines reporting results just a short time ago. We want to get over to Phil LeBeau. He joins us with a special guest this morning. Hi, Phil.
Hi, Becky. Robert Isom, CEO of American Airlines, joins us. You beat on the top and the bottom line in the fourth quarter, but the stock's under pressure because of your guidance, especially for the first quarter, lower than or a greater than expected loss. What's the disconnect here between what your guidance is and what the street was expecting?
Well, Phil, great fourth quarter for us. Record revenues, record free cash flow. And it was all about setting up for the future. Really proud of our team. Difficult operating conditions. We were excellent in terms of performance from a reliability perspective. We're setting up for the future. So record free cash flow allows us to address our balance sheet issues, strengthening that, hitting our debt reduction target one full year earlier. The Citi deal is a really big thing for us as we take a look out into 2026. But the other thing is we were able to get labor contracts done with all of our major work groups. That is hitting in the first quarter. Probably, analysts didn't take that into account. But as you take a look out into the future, this is going to be the first time in my career where I'm not going to be at the negotiating table. Our team won't be at the negotiating table for 3 years. That brings labor cost certainty. We're going to be able to manage that very well. And as we take a look out into the remainder of 2025, those cost pressures moderate, and you're going to see us really do a nice job as we move through the year.
I don't want to belabor this, but I know you guys, your investor relations, are constantly in touch with analysts.
Right.
Shouldn't this have been more clearly communicated, or shouldn't the analysts have taken into account? I mean, this is a big disconnect here in terms of their estimate versus your guidance.
Well, certainly it's a known issue, but it hits in the first quarter. That's the quarter in which we didn't have our flight attendant contract represented, and also our mechanic and fleet service contract. We'll do a better job as we go forward. But I think as we explain and take a look out into the latter half of 2025 and you look into 2026, our labor costs we're going to be able to keep those well under the cost of inflation. I'm very optimistic about the efficiency of the airline, and the revenue backdrop is such that I'm very pleased with what we saw in the fourth quarter. As we look into the first quarter, you're going to continue to see outperformance from American, and that's going to be shown. We're projecting revenues up 3 to 5% on capacity that's flat to down.
How much of your corporate travel that you lost last year have you been able to regain because of the issues that you have corrected in terms of direct booking versus going through third party?
Well, what I like to cite is the facts, and from that perspective, our large corporate travel, our revenue grew 8% in the fourth quarter. That gives us great momentum as we move into 2025. And the work that we're doing with the travel management companies and also the large corporates, it's brought me closer and our team, and I really like what we're doing. We're on target to be able to win back all the share we lost, and hopefully more as we move through 2025.
You talked about the revenue growth and the limited capacity. You're keeping your capacity in check. And if the industry does as well, are we in for a year where we see fares continue to move higher because it's a supply and demand issue?
Well, I know it's a supply and demand issue, but it's also a premium issue. And from that perspective, as we take a look out into 2025, we see our revenues growing 4.5% to 7.5% over this year on capacity that is low single.
As you add more premium seating.
In overall capacity is low single digits. And for us, for premium, we think that that's going to continue to grow, and we're skating to where the puck is going to be. And on that front, over the next 2 years, we're going to grow our premium seating by 20%.
Last question. Trump administration, new transportation secretary likely to be confirmed here in the next few weeks. What are you expecting from the Transportation Department relative to what you saw the last 4 years under the Biden administration?
Well, I'll go back to the first Trump administration, and let's face it, without the Trump administration's quick action in the first term during the pandemic, the airline industry would be in a very different shape. I know that the administration understands the importance that airlines bring to the overall economy. As we take a look out into 2025 with the new Trump administration, I'm looking for a couple of things. One, from a regulatory standpoint, I think that there's going to be a more favorable group to work with. And then the second thing is, I think that there will also be a desire to invest for the long term. We can really do a lot more in terms of efficiency. There's a burden that is brought on the airline industry with all the regulation, and also in terms of air traffic control not being able to keep up.